Hi, I'm Tara Lyons of Team Lyons with Royal LePage, and I am so excited today because I have Alana here from DLC. Alana, tell a little bit about yourself.
I am Alana DeLong, and I have a team, Alana DeLong Mortgage Team, and I'm part of the Dominion Lending Center Alliance Group.
So exciting because what everybody wants to know about mortgages is always, what's the interest rate? But there is so much more involved with mortgages, and when you go to get your mortgage, whether it's your first mortgage or your third mortgage, you want to know more than just what interest rates are. That just is what is in the headlines, what's online. So you want to make sure you speak to somebody like Alana. We can direct you to her, but you want to make sure that you're asking more questions. And here's why.
As a mortgage agent, we have a various number of lenders that we use. So interest rates can range all over. So it's our job to gather all of your information and see what property you're buying, where you work, whether you're self-employed, commissioned income. Perhaps maybe we'll have to use a different lender for your application. So rates are the least important question to ask. There are so many other factors that can affect your mortgage application.
Absolutely. And yes, mortgage rates have gone down. Woohoo! We're excited about that. And the prediction is?
To continue to drop. So hopefully this year we'll see about another 1% drop in the variable Bank of Canada rate.
Yes. So that's all positive too. So now that we've got the interest rates out of the way, let's talk about some other things, because one of the biggest changes that I've seen, and I think has really had a big effect, is the amortization period.
Yes, the insured lenders have extended the regular 25-year amortization to a 30-year mortgage now. So what that means is the first-time buyers trying to get into the market will have lower mortgage payments, will be able to purchase for a higher purchase price, so their qualification will be higher. So it's going to give more first-time home buyers that chance to get into the market.
That's amazing, and I was really surprised by what this number could look like. So just give us an example.
You're looking at about an increase of $40,000 to $50,000 on an average $400,000 to $500,000 house. So it's quite substantial for sure.
I was blown away by that. And I mean, I deal with this every day, so it's gotta shock you. So just remember, give us a call, give Alana a call, and make sure that you find out, especially if you were pre-qualified towards the end of last year, because as most people know, you may be pre-qualified for that 90 or 120 days, but you want to make sure that you get re-qualified.
Yes,
because it could affect you by $40,000 or $50,000. Hello?
With the drop in interest rates and the increase in amortization, you definitely want to get your pre-approval updated because it's definitely made a huge impact for sure. So,
and let's do that before we start seeing prices increase, which we're going to most likely see this year. So let's do that now. What is a first-time home buyer today? Because it has changed. So let's talk about that.
For sure. So in order to qualify for this 30-year amortization, you have to either be a first-time home buyer, meaning you've never owned a home before, or if you haven't owned a home in 4 years or greater, they will also allow you to take advantage of this 30-year amortization. So it allows you to get back into the market if you haven't owned a home in the last 4 years.
And that means even if one person did in two people buying a home, if one person hasn't, you still qualify, correct?
Correct. Only one of the two borrowers needs to be considered or classified as a first-time home buyer. Yes.
That's awesome.
Yes, for sure. And another benefit is if you have unfortunately have gone through a marital or common law relationship breakdown, they are allowed to get back in now with a 30-year amortization. So again, allowing more opportunity for them to be able to purchase another home.
I'm really pleased to see these changes because it opens that door for a lot of people, especially when you get into a position that maybe wasn't you that got yourself into that. So that's great.
Yes, it definitely gives them a lot more opportunities.
What is a first home savings account? Because I didn't know what this was.
First home savings account is for a first-time home buyer who's looking to save some tax-free money. So they are allowed to put up to $8,000 a year into an account and withdraw a maximum of $40,000 without paying any tax on that money.
Oh, wonderful. So let's just expand on that a little bit more to see who it is that can qualify for that.
Well, again, so there is the FHSA account and there's also RSP account. So people can have up to $60,000 withdrawn from their RSPs as a tax-free reduction as well to be used towards their down payment. If you have two people on the application, husband and wife, they can also then pull up to $120,000.
Okay, so they can actually take their RSP money out and not be taxed on it because they're using it for
a down payment. Yes,
Okay,
so that was $35,000, it's now $60,000. So it's a huge increase. So lots more opportunity to have a larger down payment with some tax-free money. The RSP, they have 15 years to put that money back in, and they do have to start repayment 2 years after their mortgage funds.
Right. And if they don't, then they start getting taxed on the amounts that are still out.
They have to then start making a monthly payment back.
So how does that differ then from the home savings account?
The home savings account is more like a bank account, like a tax-free savings account. So it is just a one-time withdrawal for their first-time home buyer plan, but you don't have anything to repay back.
Oh, okay. So it goes into the account. When you're ready to use it, you take it out. You're not being taxed on it.
Exactly.
Oh, okay.
Yes.
Excellent. Let's talk about land transfer tax rebates and how that works for people.
Well, if you're a first-time home buyer, the government does give you a rebate back up to $4,000. This is a one-time only. There's no exception for how many years it's been since you owned a last home. It's just a one-time only. So you get up to $4,000 once in a lifetime as a rebate, and that is a credit to you on closing. So it's $4,000 that you would have to come up with less at the lawyer's office, and that gets you a purchase price up to about $368,000. When you purchase over $368,000, then you're responsible for the land transfer tax that's due on that amount.
Okay. If you have two people buying a home and one has used it and one hasn't, does that one that hasn't used it still get to use it?
Not the whole amount.
Not the whole, oh, okay.
No, they're only going to be able to use 50% of
So 2,000.
Yes.
Yeah, okay, well that's fair. There's this other item out there, it's called the mortgage default insurance. So let's talk a little bit about that.
So the government made a change to that last year in December as well. So you could only apply for mortgage insurance on a purchase price of under $1 million.
You can now insure up to $1.5 million with a mortgage default insurance. This is new.
So what that means is if you're looking to purchase a home up to $1.5 million now, you don't require a 20% down payment. You can insure with a lesser down payment.
Okay.
So if you purchase a home under $500,000, your down payment is 5%. Anything that you purchase over $500,000, you put 5% down on the first $500,000, and then you put 10% down on anything over $500,000 up to $1.5 million.
Okay. So if somebody were to purchase a home worth $2 million, how does that work?
Then they would be required to put 20% down. The insurance would not cover that.
You know, let's go and sell those homes that are up to 1.5 million and
get in with a lesser down payment.
If you're buying a $2 million home, you don't need to worry about it. We're going to talk about the process to get qualified for a mortgage. It's different depending on if you're self-employed, if you're a stay-at-home mom, if you are, coming into a new job. So depending on what your situation is, it is vitally important to talk to us so we can direct you to Alana and she can take you through this process. And here's another big thing that's changed over the last year. You would have noticed when you're talking to realtors is we actually have to get you pre-qualified before we're going out to show homes today. We want to make sure you're seeing homes that you can actually buy, because the biggest disappointment is if you walk into a home and all of a sudden you fall in love with it and you're like, I can't afford it. So we want to know these answers first. It's not because we don't want to go out and show you property, it's because we want to show you the properties that you can buy. So this is the first step. Talk to us about the mortgage.
So yes, definitely what we want to do is get the buyers in front of a mortgage professional or mortgage agent first. We're going to gather all their personal information. So we're going to find out, where are they working? How long have they been on their job? Are they on probation? Do they have a down payment saved, or maybe they have family going to help them? Do they have credit? Are they young? Maybe they haven't established enough credit yet. So we're going to go through their full application, gather all their information. I'm going to ask them for income documentation, and it's all different depending. If they're self-employed, I'm going to need some tax returns to show how much income they're actually showing to the government. How much are they claiming each year? Maybe somebody has some children. We can use child tax credit. We can use child support. We can use alimony. There's so much income out there that we can actually use. So as long as we have all the proper documentation up front, we'll verify and go through the process and let that person know exactly what they qualify for before they go shopping, as you said. We don't want to be the one to disappoint them. So we're going to gather all their personal information, go through their credit, see exactly what they qualify for.
It's a lot of questions and information gathering up front, but that time taken is going to make your process go a lot faster further on.
And a lot less stressful.
Less stressful, absolutely. As you know, we're all about sharing information. And an example is if you are looking at a separation, you need to have that agreement in place because you can't purchase without it. And so you could get really excited about the beginning of that process and you're out looking at properties and then all of a sudden you can't because you don't have that in place. So talking with the professionals, we're able to tell you that up front so that we can actually save you time further along. We're self-employed. We cannot go out just buy a property. We have to have many pieces of paper in line showing what our net income is to be able to qualify for that mortgage.
And plus, if they've already found a house on the weekend, maybe they went through an open house, got really excited, they got the agent to put the offer in, that clock is already ticking to get that financing. And now I'm just starting my process. Now I'm gathering pay stubs and T4s. We could be 2 or 3 days, and now we've lost some of that time to get their financing approved. So it's way more stressful for the client, you and I, if they're not pre-qualified first. So
that's a really good point because you typically, in most cases, if you are allowed to have a condition on financing, you have 5 banking days. That's kind of the standard in our area. It's different everywhere, but in our area, you can typically get that 5 banking days. But as things change, if we wind up in multiple offers again, that time frame goes from 5 down to 3, down to 2, down to none. So we lived that. We've gone through that over the last few years. You don't want to be in that position, but we do. We want all your ducks in a row before you start going out and finding the perfect home. Are you self-employed? Because guess what? You could still qualify for a mortgage. Want to tell them how?
Sure. Yeah, self-employed, we just require a little bit more documentation perhaps than if you were working for a regular employer. But it's not impossible. So what we require is your last 2 years' tax returns filed with the government, along with your notices of assessment. They want to make sure that you've paid your income tax for sure. And whether they're a registered business or a registered incorporation, then we need those papers as well to show how their business is registered. And sometimes we can take some of the income and actually do add back. So perhaps they had a vehicle loan or a debt that's being paid through their business account. We can increase their income, sometimes using those numbers again. So that will increase the amount they qualify for as well. So we definitely need your filed taxes. And if the off chance you don't have your taxes filed, we have B lenders, so we have alternatives. So don't think just because you're self-employed you can't buy a house. We have all kinds of products and lenders available for self-employed people.
And this goes for all you people out there on commission. You may not necessarily think you're self-employed, but because you're working off commission, that can change. So you want to make sure that you're getting what rules you fall under as well.
Yes, commission income is the same. We require a 2-year history because 1 year you might have had a really good year and maybe not so good the other. They're going to do an average to see what your last 2 years income average has been.
And here's a really key, important part to remember. You may not qualify today, but we're going to help you get on the road to be qualified. And it might take 6 months. It could take a year. But at least we can help you to know what the steps are in order for you to be able to buy a home.
And guide you in the right direction.
A lot of people don't understand that you can actually use child support, you can use alimony towards income when purchasing a home. Can you tell us a little bit about that?
Yes, you can certainly use child tax credit, you can use child support and alimony. So we do require a separation or a court order to show that you are receiving this income, backed up usually by way of a bank statement. So they will allow us to use 100% of your child tax credit and child support, provided the children are under 15 years or younger. So they want to know that we're getting it for at least the duration of the term of the mortgage. So proper documentation, we can certainly use that as extra income, which will help boost that amount that you qualify for a mortgage.
That can really change, right, on your income. So excellent. Let's talk about down payments, because everybody's out there wondering, hey, I want to buy a home, but how do I save my money? Where do I get my money from in order to get that down payment?
Yes, there's different ways you can put your down payment on a house or to get you into the market sooner. A lot of family these days are being very generous. They seem to be gifting their family some money to get them into a home. They'd rather see them purchase a home than paying rent. So a family with a gift letter and proof of their deposit can actually help that person get into a home. They can gift all of it if they qualify. They can also, some people have really good jobs and really good income, but they haven't had time under their belt to actually be able to save that down payment. So they have the ability to pay on an extra loan. So they can use their line of credit to borrow their down payment. So if somebody hasn't owned a home and they only need 5% down, but they've got the ability to pay that mortgage, they can use their line of credit. We have to qualify using a minimum payment on the line of credit. So again, we take that into their debt ratio to see how much they qualify to borrow to be used as a down payment.
That's pretty amazing, especially, you know, our younger generation coming out of school and that, right, where they don't have that time built into working, but they want to go out and own a home. So
but they all have great careers and really good income, you know,
Yeah.
they've landed that great government job or, you know, a good job, paying job, but they just don't have time under their belt, but they don't want to rent. Yes.
And are you finding still that that minimum is that people have to be in their jobs for that 1 year before they're able to qualify?
We can get exceptions around income. So if somebody is looking to buy sooner than even their probation is up, so maybe they've got one of those great jobs with Hydro or CN or a job that's going to be a long time career for them, we can definitely look at getting exceptions to that. Don't wait. I've had people with a week on a job. Maybe they were a plumber or electrician and they worked for a previous employer, but they maybe changed employers. Then we don't have to wait that time because we know that their job stability is strong. And sometimes with one pay stub, I've got a deal approved.
Speaking of changing jobs,
Yes.
once you've been qualified for a mortgage because you've purchased a home and it becomes firm and you're waiting for closing, what are some of the things that you should not do between once you actually have a firm deal on a house, you've bought it, it's yours, you're just waiting for that closing date to move in? What are some things not to do during that time?
Well, that is a very important question.
Yes.
Oh my goodness. So what you do not want to do is change jobs in between.
Yes.
Definitely not. Don't go buy that brand new truck that you've been waiting a couple years to buy. So when we took your application, we got your income documents, we went over your credit report to see what debts were owing. That is how we qualified you for that mortgage. So you are not allowed to make any material change prior to funding.
Yes.
Not just from the time you sign the documents, but until the date of closing.
And one of the things that I have seen, and we always tell our clients this, a very common occurrence is going out and getting that furniture place where you are going to go buy furniture so it's ready for when you move in. But an example is if you got a $4,000 card from that furniture place, but you only bought a $1,000 couch, you're actually on the hook for that full $4,000. So that could change your debt ratio for your mortgage. So don't do that. Wait until you've gotten into your home, then go out, do what you need to do, because then you know what you can afford to do as well.
Well, or the best recommendation if you want to make any change, because some people may qualify to take that $4,000 account, just reach out to your mortgage specialist first before making any material changes to your application. Yes.
No, that's great. That's a very important lesson.
Yes.
And you don't want to learn that later.
No.
You want to know that ahead of time.
Yes,
so
for sure.
I want to thank you so much. I so appreciate you, and we have used you throughout the years, and you've always done an amazing job. So we appreciate that because we also know that we can get a deal done for our clients. So thank you, Alana, for taking the time to go through these because it's not an easy process. There's a lot of details, and you want to make sure you have somebody that you're comfortable with and knows is going to get the deal done. So thank you.
You're very welcome. Thanks for having me. And it is so important for the borrowers to have all this information and to have all their information up front and just have no disappointment, as we talked about, for sure. So thank you very much.
Wonderful. If you would like to see this checklist that Alana has created for us, it will be on our site. We're going to create a link for it as well, so you can click on it down below here. Oh, and by the way, don't forget, TaraLyons.ca. Go to our Facebook page, I Love Balwell, and don't forget to like, share, and provide this information to anybody you think might be able to be helped by it.